This program is brought to you by realestate.com.au. Keep moving with Australia's #1 address in property.
Welcome back. Let's take a look at the auctions market this week. And there are 782 auctions in New South Wales this week, with 646 of those in Sydney. Victoria will have 823 auctions. 789 of those are in Melbourne. There will be 107 auctions in Brisbane. We'll see 129 in Adelaide and 9 auctions in Perth. Tasmania will see 5. ACT will hold 55. Taking a look at the most viewed auctions this week, and in New South Wales, 26 Kent Street in Newtown is a single-level terrace with rear access and lots of potential for renovation. It's close to Newtown train station and has a price guide of $1 million. Over in Victoria at 121 Ann Street in Blackburn North, a beautifully presented 3-bedroom, 2-bathroom, single-level house. It's got a manicured garden, large fenced front yard. And this can be yours for $800 to $880,000, according to the price guide. Over in Queensland, 5 Sheldon Street, Clamvale, is a peaceful, well-maintained home on a large 930 square metres. It's got 3 bedrooms, bathrooms, and open-plan living and dining, as well as a huge entertaining area out the back with a nice covered patio. And over in South Australia at 7 Canona Street, Hallett Cove, it's a coastal property with 2 bedrooms and a loft on around 650 squares, large decked balcony overlooking the coast, and the price guide for that one is $600,000. And at 46 Ranford Way, Hillary's over in WA, another coastal home with ocean views on both levels. It's a spacious 4-bedroom house, perfect for families, gorgeous garden full of fruit and herbs. But the top listing of the week is a beauty. It's at 12 The Grove, Lower Mitcham, South Australia. It's a 4-bedroom, 5-bathroom, huge property on over 5,000 squares. Named Ashley House, it's a historic circa 1880 sanctuary with a huge heated pool, a floodlit tennis court. It's got large bedrooms, an impressive kitchen, and just in case you don't have enough to do between swimming and playing tennis, it's also got a 4-person infrared sauna and a 14-seat home theatre. Expressions of interest for that one close on the 22nd of May. Well, REA Group has released its third quarterly numbers with double-digit revenue growth, revenue totalling $1.25 billion, an 18% rise on year. Well, for more, I spoke with Owen Wilson, Chief Executive of REA Group.
Yeah, we had a very pleasing Q3 result with a 12% increase in revenue. It was driven on the back of higher yield on our residential advertising products and increased uptake of our higher tiered products by the market. Overall listings were flat against the prior period strong comparable. So it's really our product penetration and price that drove our revenue increase.
Before we get more into the numbers, obviously competition in the market's a key theme today with CoStar buying Domain. It's pretty big news. They say they have their sights set on being a strong competitor to you. City's already come out saying, look, they're in your favour, saying they don't think that it'll materially impact REA's market dominance at all. But what sort of competitor do you see them as?
We welcome the competition. It's always been a very competitive market. Domain has been a very strong competitor of ours for as long as I've been around, and I've been in the business for over a decade now. We compete with Homes.com, which is owned by CoStar in the US, so we know their playbook. Over there, they're the number 4 operator. They do tend to spend a lot of money on marketing when they enter a new market. They've just gone into the UK and the US, and we expect them to do the same here. Really, it's not going to change what we do. Our strategy is to focus on increasing the value that we deliver to consumers and to customers, and we'll continue to do that. We invest over $200 million per annum in product innovation. We'll keep doing that. And it's paying dividends. We had the highest ever audience numbers in the quarter just finished. We hit a new record of 12.6 million Australians visiting our site in March. And over 6 million of those Australians who come to our site are exclusive to us. They don't go to any other property site at all.
When you talk about putting money into innovation and perhaps marketing going forward, is AI a big part of this? Because I know you've mentioned that it's something you're certainly looking at strongly, over the next 12 months. Can you give us some colour around progress on AI?
Look, AI is basically going to be like electricity. It's going to be in everything that we touch and do going forward, and it's an integral part of our product strategy roadmap. We're already using AI in so many of our products, particularly on the customer side, but also now increasingly on the consumer side. We have a strategy of encouraging consumers to become members on our site. What that means is that we can remember the consumer when they come back, remember what they did last time, and using AI, likely predict what they're going to want to do next and give them much more rich, personalised, engaged experiences, which will keep them on our site and deliver the value to our customers.
All right, let's talk results more and interest rate cuts. Of course, most consumers have welcomed interest rate cuts. It's particularly good for your business. What impact have you seen already from just one interest rate cut?
I think the first cut in February definitely underpinned that demand side of the market. Every time there's a rate cut, it means that buyers can have an increased borrowing capacity when it comes to buying a property. I think you're seeing that in the house prices in the quarter, that they were quite healthy. And the prediction of between 2 and 4 or maybe even 5 rate cuts going forward has got to be good for our market. It'll mean that buyers can have greater capacity to borrow more. We think it'll underpin demand in the market and it'll underpin house prices, which will give vendors confidence to bring their properties to market.
Do you see quite a quick impact from those interest rate cuts as they happen onto revenue? I mean, is there a bit of a lag or is it pretty instant?
The one that we got in February, I think we had the benefit of that in a few months prior. I think everybody anticipated that the rates were going to fall. And I think you're going to see that in the market going forward. There's not many people in the Australian market who don't think interest rates are going down as the next move. And what happens if you expect them to go down, you get that benefit immediately. People are out in the market now with full expectation of a rate cut in May and then another one in the second half of the year at least. And people are acting accordingly in the market.
And so in terms of listings, seeing an increase in listings and expecting that trend to continue?
Look, listings were flat. What's happening is while it's a very healthy market with good listing volumes, we are cycling over a very healthy market last year. Particularly May and June last year were off the charts strong. And so we think we'll be sort of have moderated growth against those strong comparables. As we go into the second half of the calendar year, again, the spring selling season, which is the peak selling season in Australia, it was very strong last year. I think it'll be very strong again this year, but strong on strong probably means very minimal growth in the actual volume of listings.
Just talking operating costs, cost guidance in the first half was a little toppy. We're just watching costs continue to rise. How are you looking at mitigating these costs? We've seen a bunch of companies this week, including Transurban, cut headcount. Is that one way you're looking to reduce costs?
No, we're not looking to cut headcount. What we've done in terms of our costs, firstly, AI will be a great benefit for cost in our business, particularly around developers and writing code. AI will help with that and make that more efficient. We've also established a site in India, in Cyber City in Delhi, where we've got a lot of developers in a bespoke situation there working purely for us. We've also we've done some offshoring into the Philippines as well. So that's helping ameliorate some of those cost increases that we're seeing. But the reality is tech costs and software costs in particular are growing up double digit. And so we're going to see that flow through our numbers into FY26.
I want to ask you about acquisitions and growth going forward. Are you still looking for acquisitions after Rightmove fell through? Is this something that the business is still sort of on the lookout for?
Yes, we're always looking. We're in a very fortunate position that we get to look at a lot of things and we get a lot of opportunities brought to us, but we're incredibly disciplined and we say no to most of them. We have a very strong balance sheet. We've only recently paid off all our debt. We're sitting on about $400 or $500 million of cash, and we generate about $400 or $500 million of cash per annum. So it creates great opportunities. So we're always looking, but we're very disciplined about when we take that step to actually acquire something.
Oh, and just finally, of course, you announced at your half year that you're stepping down. You've been a big part of the business. What's the timeline for this?
Look, I've given the board the commitment that I will hang around for as long as it takes to make sure there's a smooth transition. The board are working on the process now of identifying my replacement, and I look forward to working with whoever that is on a smooth transition, and so I'll be around as long as that takes. So I actually don't have an end date yet. but look forward to that announcement coming out in the coming months.
Owen, appreciate your time on the program. Thank you so much for joining us today.
No, thanks for your time.